All right, y'all, welcome. Welcome to session B, I guess, of Market Cipher 103, right? I couldn't decide if I wanted to do numbers or letters. This is going to be session B, part 2, I guess you could say, of Market Cipher 103. And what I want to do is I want to go over a few more trade setups. These are actual trades that I took, okay? These are trades I actually posted the setups in my Discord. And again, the way you can get access to this Discord is by going to patreon.com/Jayson Casper. This was the trade setup that I took right here, where I entered at 28,835, and that was this right down here, as you can see. Then where was the other trade? Just so you guys know that these are real trades that I took, and I'm not just going in hindsight. These, of course, now we're dealing in hindsight, but at the time, I wonder if you could hear the rooster crow. At the time, I was looking at these trades in a future time. So right here, this trade right here, this trade setup that we took right here from the daily support at 33,000, which was right here way back on June 20th, 2021. Then took this trade on June 22nd, 2021. And then took this short on June 29th, 2021. So again, remember, we have to go through our process of trading. So first we're going to wait for price to come to one of our levels. So let's start with this short, okay? Did price come to one of our levels for this short? Well, let's see. I do have a fib right here. So, yeah, price came to our fib level, and the way I got this fib, just so everybody knows, is I took it. Here's my fib, and I took it from this swing high up here to this swing low right down here. So literally I took it from the all-time high to the all-time low of this move, and you could see that the 618 retracement is coming in right about 36,488, and I did take a short from there. So I got an alert that said price was coming up to the 618, and I came to the chart, and let me just walk you through again the process of how I used Market Cipher to find this trade. And again, this is higher term time frame, swing trading, day trading, right? Swing trading. I consider this a swing trade because I've been in this trade now for 3 days. I've been in this long now since June 22nd. It's currently July 1st. So it's been 9 days that I've been in this trade here, over a week. And, so I would consider this swing trading, day trading, and then we'll go into scalping later. But I wanted to give a few more examples because I only gave one example and it was a very obvious setup. These are going to get less and less obvious as we go, but I just want to show you how you can look for different nuances on the Market Cipher indicator in order to find those good trade setups. So I got the alert, price is coming to my level, and so now let's start with Market Cipher B on the 4-hour time frame. So let's take a look and see what we can see. Well, 4-hour time frame, here we are. What do we see? We see the money flow is curving up. We see momentum is coming up. The only bearish thing we see is the bearish divergence on the VWAP, right? The VWAP continues to print lower highs as the price comes up. So we come over here and our 4-hour time frame, the environmental time frame, we're going to give it one signal. 2 out of 3 things are bullish, 1 thing is bearish. Okay? So because we're coming to a resistance, we're automatically looking to short the 4-hour time frame. Is it giving us a bearish signal? I would say it's neutral. It's neutral. There's 1 thing telling us to short. There's 2 things saying we're going to keep going up. So now let's go to the 2-hour time frame, see what we can see on the 2-hour time frame. Now the 2-hour time frame now is giving us 2 bearish signals and only 1 bullish signal. The bearish signal is that we are getting higher highs on the actual price and we're getting lower highs on the VWAP. That's one bearish thing. The second bearish thing is that we are about to print a red dot right up here. As we're touching our level, we're about to top out on a momentum wave. And also, we can see that as we're getting higher and touching our level, we can also see the money flow coming down, right? You see that? It's slight, but we can see as we're coming to our level, the money flow is actually coming down. We don't have any divergences on the, well, we do have the divergence on the VWAP, but we don't have any divergences on the momentum waves. We do have a very slight divergence on the money flow. So because we're about to print the red dot and because we're getting the bearish divergence on the VWAP, we have two things indicating to us that the 2-hour is bearish. So I would go ahead and say the 2-hour is looking bearish. Then we come down to the 1 hour. The 1 hour, and the reason we start in the 4 and go down to the 1, the reason we're using multiple time frames is because, remember, we're zooming in, right? We start on the 4 hour, and it gives us not so much clarity, right? The 4 hour, we can't really tell what's going on. So we zoom into the 2 hour and say things are starting to look more bearish. Then we zoom into the 1 hour, and what do we see on the 1 hour? Well, on the 1 hour, as we're touching our level, we're printing the red dot. So this is bearish, right? Because the 1 hour is printing a top, meaning we need to cool off. Also, we can see extremely clearly on the 1 hour the bearish divergence on the VWAP. VWAP is coming down. However, VWAP is coming down. The price of Bitcoin is coming up. So we have the bearish divergence there on the VWAP. And money flow, it's coming up a little bit. I would say money flow looks bullish. There's no divergences. There's no divergences on the 1 hour. But I would still say that the 1 hour is bearish simply because we're printing the top of a momentum wave. And so printing a top of a momentum wave on a higher time frame like the 4 hour, maybe the 2 hour or the 1 hour, this is a sign that we definitely need to come down at least a little bit. At least a little bit. Look at every red dot on the 1 hour, and we always come down at least a little bit, right? At least even just a little tiny bit right here. Right here, print the red dot, come down a little bit. Right here, print the red dot, come down a little bit. And in fact, I did short both of these as just little short scalps. They weren't swing trades. They could have been, but, you know, they got stopped out in profit. So we do see we see the bearish signs on the 1 hour, so I'm going to go ahead and label that 1 hour bearish. What direction does price look like it wants to go? Well, we come to our resistance. We look at our environmental time frames and we say, okay, it looks like price wants to go down. And remember, we're looking at all things considered on all three of the environmental time frames, or however many you're using, and we're going to come up with one signal. Okay, we need to weigh everything together and say, in general, what is the information telling us? What is Market Cipher B telling us in general? In general, it looks like we are coming down. So now we're going to go to the lower time frames and see what the lower time frames are telling us here. Okay, so let me go down to maybe the 24-minute. Starting the 24-minute. What do we see on the 24-minute? Well, on the 24-minute, we actually do see a bearish divergence, right? We see that the price is coming up and the momentum is coming down. You see that? We have a red dot right here, and our price is at this red dot, our price is at 36,146. Then we come up to this high. As we're printing another red dot on Market Cipher B, our price actually comes up just a little bit to touch this resistance right here at about 36,514. So price comes up a little bit as momentum is coming down. Okay, that looks bearish. Another thing we see is the bearish divergence in the VWAP, where price continues to get higher and the VWAP is coming down, right? VWAP is printing lower highs, price is printing higher highs. So we do see divergences now on the 24-minute time frame. It's a little bit hard to spot, right? These aren't the clearest divergences, so let's zoom in a little bit. Let's go to the 12-minute time frame. What do we see on the 12-minute time frame? Well, on the 12-minute time frame, we can see it a little bit more clearly. That as we are coming up in price like this, we see that the momentum is coming down like this. And now, actually, believe it or not, on the 12-minute, we can actually even start to see money flow coming down a little bit, right? Just a little bit. Just a little bit. As the price continues to come up at this last little push up to the resistance, we do see money flow coming down a little bit. And of course, during this whole run up here, we also see the VWAP printing the lower, right here. The VWAP also diverging, right? The VWAP is printing lower highs as the price is printing the higher highs, and we can drag that all the way back to here. And so the 12-minute is also giving us some bearish signs. And remember, we're interpreting the information we're seeing here on the 12-minute through the lens of the information that we've already gathered on those higher time frames. So because we've already looked to our level and say it's a resistance, it's likely that we're going to get a reversal here. And then we looked at our higher time frames and we came to the conclusion overall things are looking bearish. Now we come to our lower time frames, and so far the 24-minute and the 12-minute, we do see divergences in momentum. We're starting to see divergences in money flow. Let's go down. If things are unclear on like the 24-minute and the 12-minute, that's where we really go down to the lower time frame. So let's go to the 3-minute now. Let's go to the 3-minute and take a look at what we can find. So we come to the 3-minute, and here things are extremely clear, because not only do we have an extremely clear divergence right here. Actually, you could technically even pull it back to here and look at this. Okay, we have over time, right? Now remember this: the lower the time frame you get, there's going to be more clarity. So you might have an outlier wave that breaks the trend a little bit. But overall, we want to be able to connect the direction of these momentum waves and see that they're coming down. We can also see that the money flow is diverging, and by the time we're coming up to our resistance, right, the first time we tap it and the second time we tap it, money flow has actually crossed from blue into purple. If you see a divergence where all your other signals are telling you it's time to look for a short, prices at your level, the higher time frames have given you the bearish signal, then you start to see on the 24-minute, the 12-minute, things are looking kind of bearish. Then you zoom all the way into the 3-minute and you see, hey, not only is there a divergence of money flow and momentum waves, but the money flow is actually even crossing into the purple as we're coming to our resistance. This is how you know we are really going to come down. That's how you know we're really going to come down. And so at this point, this is where we just look for our entry or a reaction off the level. What are we looking for when we say a reaction? Again, we could be looking for a few different things. Either we're looking for a wick that comes up and then gets rejected really quick, something like this at our resistance, or we can wait a little bit longer, be a little bit more conservative, and wait until we start printing just lower highs at the level and maybe enter here when we have a very clear confirmation that money flow has crossed into the purple. This is the second lower high. The entry is really kind of up to you. You'll kind of get into the flow of it as you trade for longer. For me, I forget exactly where I entered this short. I can find out because I posted it in this Discord right here. This is the trade, 36,354. 36,354. So I probably entered right around here once we started. Once probably we put in this lower high, 354. So right around this area, right around these candles here, as I saw, okay, yeah, this is real. This is a real rejection. This is where I entered. And now currently, I'm still in the trade right now. I'm still in this trade. So that's how you're going to go through it. Let's talk about some long trades, and then we're going to go into some scalp trades, okay? We'll talk about long trades. We'll go into scalp trades. Interesting, right now we just have a little bearish divergence on the 3-minute. You can see that price came up from here to here, and momentum came down from here, from here to here. And what do you know? We're getting a massive purple candle. These divergences are legit on Market CIPHER. I mean, these are super legit. And you know, you can see what happened here with this divergence, right? This is kind of, now we're getting into scalp territory, but you know, you see the price coming up, you see the momentum coming down. You can even start to see the well, no, you can't really see the money flow coming down yet, but you can absolutely see the VWAP coming down, and this divergence, I mean, it plays out, and we get this drop of about 2%. What a great scalp. We're going to get into how to scalp with this strategy later. This is more of the swing trade, day trade strategy, to use Market Cipher. But let's look at a long trade that I took a while back. I want to take a look at this trade I took from the daily level. When was that? When was that? Hang on one second. It was right here, okay, right here. It was not the best trade in the world in hindsight, but it was still a nice 8.6% move. So, price is dumping. Price is dumping. And this is something I should say, guys. When price is dumping, it's best to look for a long, and when price is pumping, it's best to look for a short. However, if price is dumping, you can still look for a short if you reject off of a level. I'll get into that in another video, but let me turn this stuff off here. Let me turn off these things. Just for now, just for now. So why did I enter this trade? Well, price was dumping, and we came to a daily level of support. A daily support. These are going to be some of your best trades if you can find a trade off a daily support. In fact, right now, we're consolidating at a daily support. The 4-hour looks kind of bullish. This actually might be a good trade to take right now. This might be a good trade to take right now. But we came down to this level, and so my alarm went off. You can see we wicked down right to this level. My alarm went off. I came to the 4-hour time frame, and what did I see? Well, I saw that we were not printing a red dot, which is important. Remember, I said if we are printing a red dot on the 4-hour, you definitely do not want to long. And if we're printing a green dot on the 4-hour, you definitely do not want to short. But here's what I saw. I saw we're coming down to our level. I saw that the momentum waves, although not confirmed yet, was actually giving us a bullish divergence on the 4-hour time frame, where the price was making a lower low and the momentum was putting in a higher low. Although not confirmed yet, again, the 4-hour, we're kind of trying to front run things a little bit to see where is the momentum, where's the direction heading. So now I'm going to go down to the 2-hour. Let me see here. Now on the 2-hour, again, we don't see the divergence like we saw in the 4-hour. So we would label that 4-hour bullish. Okay, our environmental time frame, 4-hour bullish. Now we're at the 2-hour. Let's see what we can see on the 2-hour. On the 2-hour, something that we notice is we are still getting a slight divergence here. No, actually, we're not getting a divergence. We're not getting a divergence at all here on the 2-hour. Not at all, actually. The only bullish sign we're getting on the 2-hour is the fact that as we're coming down to the level, it looks like we're about to print the green dot. We can see this angular little kind of shape in the wave here. I don't know if you can see this pointy little tip as we're coming down to the level, and it looks like we potentially are about to bottom out. So again, we're combining all these things together. So the 4-hour we've already determined looks bullish. Now we're on the 2-hour. It doesn't look too bullish, but it's still printing, about to print a green dot. If something is about to print a green dot, that's considered pretty bullish. So let's go ahead and just mark the 2-hour neutral, because let's just be objective here. It's neutral, right? It looks like we could get a pump, but we don't know for sure. So now let's go down to the 1-hour. We're coming to the 1-hour. This is it right here. On the 1-hour, we actually do see a very slight bullish divergence as we're coming down to our level. We see a very slight bullish divergence. So that is giving us a bullish sign. Let's take a look at the VWAP here. The VWAP is neutral. Let's take a look at money flow. What is money flow doing? As we're coming down, money flow is actually coming up, so that's bullish. So we have two bullish indications here. The VWAP is actually pretty neutral as we come down to the level. But overall, I would say that this is bullish on the 1 hour, because we do have a bullish divergence in the money flow and the momentum waves on the 1 hour. Extremely bullish, extremely bullish. So I'm going to go ahead and label this 1 hour bullish. So overall, our one signal from the 3 environmental time frames we looked at is bullish. And so this is very significant. Now we know we're at a support, and the higher time frames are giving us a bullish signal, meaning we're looking for longs. So let's zoom into the lower time frames to see what will we actually be able to find here. Let's start with maybe the 24 minute, okay? Start on the 24 minute, come back to where we are. Do we see anything that's indicating to us bullishness? Well, honestly, not so much on the 24-minute time frame. And this is why we have to use different time frames, right? Because something made me take this trade, and probably was not the 24-minute time frame. You know, in hindsight, you could say, well, you know, we could see that money flow was coming up a little bit as we were coming down, but you know, in the heat of the moment, this is a neutral thing right here. Let's go to the 12-minute time frame. Let's see what we can see on the 12-minute. On the 12-minute here. Well, on the 12-minute, we do see a bullish divergence forming on the momentum waves. It's a little bit hard to see, but if you can take a look right here at this bottom, okay, this big old wave that came all the way down here, price is giving us this wick, and then we come up and we form, you know, we're starting to form another momentum wave right in here as price is hitting the daily level. So this is actually a bullish divergence because the price is coming down and the momentum waves are coming up. And remember, the momentum waves, although it's easiest to identify them like this, where we have 1 hump, 2 humps, 3 humps, 4 humps, they don't actually have to be the humps. All they really are where the waves cross, and every time the waves cross, we get a dot. Okay, so if you're seeing that there's a green dot here and then a red dot here, this is still a momentum wave. Okay, it's still a momentum wave. And so we can still draw that divergence there. And so we're starting to see some bullish things here on the 12-minute. Let's zoom in a little bit, maybe go to the 3-minute and see what we can see on the 3-minute. Come back in time to the actual trade setup. Where was that? I lost my spot now. Sorry, guys. Okay, we got to go back some time here. Got to go back some time. Here it is. Here it is. This is the trade right here. We come down to our level. Now what do we see on the 3-minute? Well, on the 3-minute, we can now clearly see the bullish divergence starting to form, where price is coming down. We get this one last big drop, right? We get this one last big drop right to our support. We see the bullish divergence forming, not only on the momentum waves, but also in the VWAP. Let's go down now to the 1-minute, because remember, we want as much confirmation as possible. That's why I'm going to so many different time frames here. Okay, here we are. Boom, the 1-minute, perfect on the 1-minute. On the 1-minute, we're getting the money flow, right? We see a number of things. We see the divergence in the momentum waves, where the momentum waves are getting higher as the price is coming lower. We see the divergence in the VWAP, where the VWAP in general is getting higher, right? In general, is printing higher lows, okay, as the price is printing lower lows. And then not only that, but we have the money flow itself. The money flow itself is, look at this. The money flow is, as we're coming to our level, the money flow is coming up, right? We can see the money flow is starting to come up. And this might be a little bit hard to see, so let me turn off the dots. Let me turn off the RSIs for a second. And let's just take a look. Okay, we see the money flow, the purple. We have this deep purple wave, and then we have this shallow purple wave up here as the price is getting lower. Our VWAP, we can see the VWAP is printing lower, and as we're coming up to touch our level, we have a low, a higher low, a higher low, a higher low, a higher low, and a higher low as we're touching our level. And then the momentum waves, as price continues to drop from all the way up here to all the way down here, our momentum waves are coming from here all the way to right about here as we're touching our daily level. So the 1 minute is extremely bullish. So, what do? We checked the 24 minute, we checked the 24 minute, we didn't really see much. So that, let's ignore. We got the 12 minute, we did the 3 minute, and we did the 1 minute, right? So those are all giving us bearish signals. Do I see them things? Do I see the divergences in momentum? Do I see the divergences in money flow? Yes, I do see them. And so now what we're going to do is we're going to look for a reaction off that level. We have all the market cipher signals that are telling us this is a great place to look for a long. And then what do we see? As soon as we touch this daily level, as soon as we touch it, what do we see very clearly? We see a massive bounce. We see a massive bounce off this level. We wick down and we're unable to hold down there. We just get this massive 3 minute time period where we go up literally in 3 minutes 0.5%. Okay, just this crazy bounce, and it really doesn't even stop. And you could enter at the actual wick reaction, or you could enter when we're starting to print higher lows, right? Our first higher low was right here. Our second higher low was right here. And so you could have entered, at 33.4. You could have entered at 33.7. You could have entered right as we come up above the daily. And, this was a pretty nice move, right? It came up. Let's zoom out here back to the 4-hour time frame and take a look at that trade. That trade was right here. And like I said, that was an 8% move. And even if you got in a little bit late, let's say you didn't get it until 34. Let's say you didn't even get into 34.2. You're still getting a nice 5% move there. So, you can wait a little bit to make sure there's a real reaction before you enter, but just understand the risk to reward. There's more reward if you get an earlier entry. There's more risk if you get an earlier entry. There's less reward and less risk if you wait for a later entry if you have all these confirmations. Now let's take a look at this long right here, because this was an interesting long. The way we got this long was we were looking for previous support levels that we could possibly get a bounce off of as we're crashing down. And just to put this in a little bit of context here, let me turn off these daily support levels. Just to put this in a little bit of context here, as we were crashing down, people were saying that we were going to lose this very important support, right? This very important bottom of the dump. Ever since we dumped from the all-time high, this had been the bottom. So people were saying if we lose this support, we're coming all the way back down to 26,000. So why did we get a bounce right here? Well, if we take a look and just draw a line right here, this was actually the all-time low back in January. And a lot of times when we're dumping, it's very important to be able to look at previous lows and understand that these previous lows can act as supports where we could get a bounce. Okay, we could get a bounce off these previous supports. And if we had fallen through this support, then be looking at this wick right here for a possible bounce, coming in at right 27.7. In fact, if we lose this, it's very possible we could do something like that, something more so like where we drop through it a little bit and then get a bounce from it, right? You should always be looking for those kinds of support levels, those wicks that we've wicked down to in the past to get a potential bounce. But anyway, so this one right here, this was our all-time low back in January, on January 21st, right? That was the lowest that we got to. After this all-time high of 42K, we dropped, and the lowest we got was 28.8, give or take. And so what happened was, if we put a little line here, we came right down to that level of support. And, I had been doing a lot of technical analysis on this section here, and I actually came up with this right here, where I had this little box of support, where I was basically, I told everybody, if we fall through this box of support and then we come back up through it, that would be a great long position to enter. And it turned out to be a really good long position to enter. So we had multiple levels of support that we were looking at price to come to. And as we continued to drop through the box, then we were looking to lower levels. We were thinking maybe we'll get a bounce off of this level, maybe we'll get a bounce off of this level, maybe we'll get a bounce off of this level. It ended up we got a bounce off of this middle level right here. And so let's walk you through how you're going to find these kind of entries, because it's important to go in hindsight and see, how were we using Market Cipher. Well, first of all, we got the alert and we're watching it. We're watching it during the live stream. I think I was live streaming this. I don't know if we got all the way down here, but I got the alert. Price is in my box of support. So I'm looking now. As I'm getting my alert, I'm starting on the 4-hour, and I'm asking myself, do I see anything on the 4-hour that looks bullish? Do we see anything on the 4-hour that looks bullish? Absolutely. We see this massive bullish divergence on the 4-hour forming, right? As we're coming to our box of support, this bullish divergence is forming on the 4-hour, where momentum is coming up as price is dropping. And this is massive. If you see this on the 4-hour time frame, that is absolutely massive. Price is coming down 17%, while momentum is printing higher lows. That's huge. And then again, we have the VWAP. As price is dropping, the VWAP printing higher highs, right? This one hadn't really formed yet, but even still, we could still just draw a trend line here and see that the VWAP is en route to forming higher highs as price is forming lower highs. So we're coming down to our box of support right here, and we see some very bullish signs. So the 4-hour, what do we see? 4-hour on our environmental time frame, super bullish, right? Got to put that in. It's looking super bullish. Now let's go to the 2-hour. What do we see on the 2-hour? On the 2-hour, we see the same kind of thing, right? We see that the VWAP is getting higher over time as we're coming to our box of support. We can see also that the momentum waves, as we're coming to our support, are printing, higher lows as prices printing lower lows, right? This is just abundantly clear right here. The money flow is still coming down, but because the momentum waves are coming up, we can kind of get the idea that this might be the peak. This general area is probably going to be the peak of the money flow, right? Remember last session, I was saying how we can kind of tell what's going to happen with the money flow because of the momentum waves. The momentum waves are coming up, and even though the money flow is coming down, this is telling us we're coming to the peak. Because remember, the peak of the money flow is really where we want to be longing. The peak of this wave is where we want to be longing. CryptoFace talks about this a lot. The peak of this wave is where we want to be longing. The way we can tell where the peak kind of is, because remember, in hindsight, we can see everything, but in actual, when we're actually entering this trade here, right, these momentum waves, we don't know where this wave is going to end, right? We have no idea. How do we know this money flow isn't going to keep coming down? The way we know is because we're seeing the momentum wave starting to come up, which is telling us, okay, it's very probable that now we're going to see that money flow start to curve up. So I would say the 2-hour is also looking quite bullish. So come over here, 2-hour bullish. Okay, now let's take a look at the 1-hour and see what we can see on the 1-hour. Okay, come to the 1-hour. The 1-hour, again, everything's super bullish, right? Everything's super bullish. We got the divergences. The VWAP is diverging. The momentum waves are diverging. And as we're coming down to that support, we have a very clear hidden divergence. A hidden divergence, guys, is where basically this would be considered a hidden divergence, where we have two momentum waves that are not next to each other, that are, we can see the direction when they're not next to each other. A regular divergence is this right here, where the two momentum waves next to each other are coming up while the price is coming down. But if you're in a trend and over time you see a high and then a lower high, and then you see a low and then a lower low, and then you see a low and then a higher low on your momentum, that's considered a hidden divergence. They're both good, so don't get wrapped around the axle about finding a hidden divergence versus a regular divergence. The 1 hour also looking super bullish, so the signal that we give ourselves for our environmental timeframes is bullish. Price is looking like it wants to go up. Now we're going to look at our lower timeframes. Let's start with the 24 minute. We come to the 24 minute, and as price is coming down, we're going to be looking for divergences. Now, keep in mind, right, we are waiting for price to come to a level. So you could say that right here, price was coming down and we had a divergence, right, on the 24 minute. You could have said, hey, how do we know not to long here? Well, first of all, you actually could have entered a little scalp long here. You could have, absolutely. But the reason why we wouldn't look to enter a nice swing position here is because price was not actually at our level. If we look close, price was not actually at the box. And the top of this box was a level. I'm pretty sure it was a daily level, if I'm not mistaken. Let me turn it on. The bottom of the box was a daily level. The top of the box, I think, was a 4-hour support level that I had marked out in the chart. And so that's why, that's not the entry that I was looking to take. I was looking to come lower because we hadn't actually come to our level. Then you see that we come down here, and we actually do touch and bounce a level. Why not take this entry, right? A lot of people are like, why not take this entry? Well, if we take a look at market cipher, we can see that the waves are actually coming down here, right? We're not getting a bullish divergence as we're getting the bounce off of this level right here. We're just not getting it. It's not until, right, we come down to this actual point right here that we get the reaction that we're looking for. And not only do we get the reaction that we're looking for, because, we did get a reaction here, we did get a reaction here, but here we do see, the divergence, right? We see the divergence. We can pull it from here to right here as we're touching the level. And literally as we're touching it, this massive divergence is forming right here. And if we go down now to the 12 minute, let's take a look at the 12 minute to see what we can see. Again, on the 12 minute, now we can see very clearly, look at the money flow. Look at the money flow. As we're coming down to that level, the money flow over time is getting more bullish. The VWAP, we can see over time, getting more bullish as the price continues to come down. And really, the entry is going to be on the 3 minute and on the 1 minute. Okay, we'll come back in time over here. Let's take a look. Let's take a look. Let us take a look at the 1 minute. Aha. Here we are. On the 1 minute, literally, this is the 3 minute. I'm sorry, not the 1 minute. But literally, as we're coming down to that level, to that exact level here, we do see, this extremely clear bullish divergence right here. We've got the hump up here, the hump right here. You can see price is coming down as the wave is coming up. And then if we go to the 1 minute to just get the utmost clarity, here we go. Sorry about that, guys. On the 1 minute now, we can see that the money flow is giving us the bullish divergence. We can see that the VWAP is giving us the bullish divergence right here. We can see that the momentum waves are giving us the bullish divergence right here. And now what we're doing is we're looking to see a reaction. We have everything now is telling us this is a good entry. As soon as we touch the level, what do we get? Literally, as soon as we touch this level, this all-time low in January, we get a massive reaction. We get a massive reaction. In 2 minutes, we actually get a, let's see here, a 3% move, okay, in 2 minutes. That's a massive reaction. And so you could enter when you see this massive reaction. If we go to the 6 minute, you know, it looks more reaction-esque, right? We see this wick, this massive wick that just comes up, and if you don't want to enter there because it's too risky for you, well, you know, wait until we print a higher low, right? We printed our low, we printed our high, we printed our higher low, and you know, you could have entered when we came up and came above this level right here. You could have entered when we came up above the daily level right here. There were so many opportunities to enter, and that's the thing. Like, we're stacking all the elevating factors, all the probabilities in our favor, and we're looking for levels where we could potentially find a reaction. Now, there's a few things I should mention here. In hindsight, it's easy to just say, yeah, of course we should have done that. A lot of times what will happen, guys, is I will actually long, you know, I see we're coming down to a level. If I get multiple confirmations, I might enter multiple long trades, right? I might enter multiple long trades. So, for example, we came down to this support, and you could say, well, maybe not so much on the 6 minute here. I mean, we didn't have really clear signals for this, but let's say you're going to enter this trade here, right? Because we came down. Did we even touch that level? No, we didn't even touch that level. So we really didn't have an entry. We really did not have an entry, except for maybe this one right here. This one right here, where we fell down through this support and we came and we got a 2% move right away. Okay. You had two options. You could have either longed as soon as you saw the reaction, or you could have waited for a higher low. We never did get the higher low. Okay, we never got the higher low. If you had longed the reaction, what you would have done is you would have put your stop loss, right? As soon as we come up above that level, you would have to put your stop loss below that last swing low and set it upwards. You would have lost, you know, 1% on the move. Not a big deal, because you just wait for the next support. Now, of course, this is called catching a falling knife. We want to try to avoid this as much as possible, which is why perhaps you wouldn't have wanted to long that, because we can actually see there's no divergence here as we're coming down. But if you find yourself in a position where you think you have your confirmations, you enter long and you get stopped out, don't worry, because if you're using good risk management, which we will deal with more in the next few sessions, the gains that you will get from the actual support that you are longing with your confirmations will pay you back from the small loss you made on this trade. So this is kind of how we're going to be approaching trading with Market CIPHER. In general, I'd say during sideways action where, you know, the market isn't moving too much, right? We're not in a very clear uptrend or downtrend, are we? In this section of price action, we're kind of trading sideways. You know, some of the strategies I'll talk about later, actual trading strategies, deal with trading in a trend, like the 4-hour, 24-minute strategy or the 5-minute, 50-minute strategy. They can also work in sideways markets, but this that I'm showing you here, using Market CIPHER to find those divergences, looking at the money flow, the VWAP, and the momentum waves, this is really going to be your bread and butter. So this is the end of part 2 of Market CIPHER 103. In our next part, part 3, we're going to deal with more of a scalping strategy, okay? We're going to be dealing more with scalping and less with day trading, so stay tuned for that.